watching BNN Bloomberg. I'm John Ehrlichman. Stocks opening higher on this Wednesday, a third day of gains for U.S. stocks. Let's head to New York now. Checking with Kriti Gupta, who's following the U.S. equity path this morning. Kriti, just give us a sense on what the overall driver has been.
That's right. We are seeing stocks in the green again today. A lot of this coming from the comments coming from the president. This idea that we really need to reopen the economy. The president, the Trump administration, really pushing to do that, saying that, well, we could see some more cases come about, but at this point, we really do need to reopen the economy. The crucialness coming from this unemployment figures. You're seeing the ADP survey this morning also come in, showing 20.2 million job losses in the month of April. Now, we'll get the official number on Friday. Of course, that number falling in line with estimates. But once again, underscoring the point here that the president is making, really, that we do need to open the economy, that we do need to kind of get these people back to work, get that money flow churning. Even on the fiscal side, you are seeing the deficit really take a hit with these pandemic expenditures coming out of the government as well. Even the Treasury is coming out and auctioning off a record $96 billion to deal with that. So you're seeing all of this kind of go into positive sentiment in the broader macro picture. You're seeing stocks really rally here at the open on this idea that, okay, this could mean that we're getting back to work. The urgency is just really that big.
And companies are the ones at the end of the day that have to make a decision on how their businesses are going to get back to work. If we think about one of the hardest hit industries, the cruise industry, you've got an update on what we're hearing from one of the biggest players in that sector.
That's right. The tourism sector as a whole, of course, as we know, airlines, cruise lines really taking a hit. Remember, the tourism sector is something very crucial to watch as we're talking about this idea of reopening the economy. It does make about 10% of global GDP. So something that's really important to watch is just how the sector is faring. But I do have an update here. Norwegian Cruiselines, one of the hardest hit companies in this sector. Of course, they stopped sailing those cruises in mid-March along with Royal Caribbean, Carnival Cruise Lines as well. They issued a warning saying that they potentially could not keep up with their going concern. A going concern is an accounting term, basically meaning that they have enough assets to stay afloat. That being said, they even had a $400 million investment from a private equity firm, and even that wasn't enough to really assure investors as well as management that the company could stay afloat. That all changed this morning as they issued $2 billion of debt. And there was so much demand for their debt that they actually saw an upsize in that transaction up to $2.2 billion. So very crucial numbers there. And actually, you're seeing shares rally this morning off the idea that this company now has additional liquidity to deal with that pandemic hit.
Let's also talk about the story of the Walt Disney Company. It is the worst performer so far this morning in the Dow. And this year overall, it's one of the worst Dow components, losing 30% of its value. Similar themes that you were just talking about with the cruise line business. Of course, Disney has their own cruise operations. Just give us a sense on what the company told us about their outlook ahead as well.
That's right. Disney, remember we previewed this yesterday. We were really expecting a bigger possible improvement in the stock, some possible good news from the company about how they were dealing with this, yet investors were at the end of the day disappointed. Disney reporting an adjusted earnings loss of at least of more than 30% below estimates. That is the most the biggest miss in more than a decade, really coming off this idea that these parks, these amusement parks, even their kind of film productions have all been postponed. Those parks turned into ghost towns, essentially, and those films really pushed later into the year. Mulan, for example, is one that I was personally very much looking forward to. That, of course, pushed later into the year as well. So this idea that these main revenue drivers from Disney all kind of put on pause. The one bright spot, though, in their earnings was that Disney Plus kind of component of their business. Analysts saying that could be the one reason to really own shares. As you can see, that business really growing, but overall not seeing that big of a change in numbers. You did see Disney suspend their July dividend. That is crucial, kind of coming in line with this broader idea that companies are suspending their dividends, suspending their buybacks to really deal with these pandemic costs. But at the end of the day, analysts, investors not leaving that earnings call with much more certainty on what lies ahead. So Disney under pressure this morning for those reasons.
Okay, Kriti, thank you very much for the update on the Disney story. You mentioned there was at least one bright spot for Disney. Speaking of bright spots, gold's been shining bright so far this year. That's made Barrick one of the top performers on the TSX. Now, the company just came out